Hey traders, Steven here with another weekly review of my trading strategy. Today's going to be a short video. We're only going to discuss one trade, but I think there is a lot to learn from the trade that we are going to discuss. This trade is one that I posted on TradingView, and it will be a really good opportunity for me to explain how I do top-down analysis in the markets every day in order to get involved in trades. So I'll let the intro and disclaimer roll, and I'll be right back to share with you how this trade went down. So here's the trade that was posted on TradingView, and as you can see, I did write down on the chart some of the reasons that I decided to get involved in this. One of the main reasons is because on a higher time frame on the daily chart, we seen that we had a break and close below this trend line right here in blue. And once price action breaks and closes below a trend line, that trend line more often than not does become the next resistance level after a brief rally. So we had the break and close below the trend line in blue. We put in a double bottom here with RSI divergence and then came up to retest that trend line, and while we were retesting it, we did go overbought. Then we pulled back some here to create the V in our double top formation, and once we came up to retest this first leg of the double top, I noticed that we did have RSI divergence and we could not get back above this high. For that reason, I went short at 1.6645, and if I click the play button here, you'll see how this trade played out so far. We have come down to hit first targets, and our stops have been rolled to break even, and we are very, very close to hitting target number 2 on this trade. And now what I'll do is go to my charts and explain to you a little further in detail the analysis that I went through in order to put myself in this trade. So here we are on the EURNZD, and when I'm doing top-down analysis, I normally go one time frame above my trading time frame. So if my trading time frame is 1 hour, I will do 4 hours. If my trading time frame would have been 4 hours, then I would have done a 1-day time frame for my top-down analysis. But considering that my trade was on a 1-hour chart, I decided to do top-down analysis from the 4-hour chart. And what you will notice here is the trend line that I was talking about. So there's our trend line, and we also had a couple of fib levels that created some confluence here at this same level. We have a 50% pulling from that leg and a 382 pulling from the next swing high. Those two levels are lining up here for some fib confluence. So as of right now, we had a recent break below a trend line, and also break and close below support levels. And we also have Fibonacci confluence, all in the same area where price action is coming back up to retest the trend line. Now we'll drop down to our hourly time frame. As you can see, we're right in line with that trend line on the double top formation that I sold, which is right here in case it's hard to see. And what I did from here is took a look back. If I just draw in a horizontal line, you'll see that not only did we have that trend line there, but also we had a few nice support levels here. 1, 2, 3, 4, 5 different times the market has come to that level and reacted. So we know that that level should be considered a decision point in the market. So we have those previous support levels that could turn into resistance meeting up with the trend line that we recently broke that could turn into resistance. And once you add the double top here with RSI divergence that we had, and also in an overbought area, this trade was a no-brainer. And using 2 targets gave me a pretty good risk to reward on this trade. It looked something like this. Down here for target 1s. And for target 2 down here at previous structure. So really we had almost a 3-to-1 risk reward because of taking 2 targets. And guys, it's really important to remember that everything we're using here is a tool, not to be used on its own, but to be used in an arsenal. So, for instance, if you were just to go through the market and say, I'm going to trade every single time I see RSI divergence. There we have divergence on RSI. Here we have an equal highs with RSI divergence. If you were to go through the market and say, I'm just going to trade every time I see RSI divergence, you would not be profitable. At least not from what I've tested. And if you were to go through and just say, I'm going to trade every time I get Fibonacci confluence, like we were discussing earlier with the 382 and the 50% retracement coming together right here, you would probably not be very profitable doing that. If you were just to sell every time price action broke through a trend line and came back up to that trend line with no other analysis, more than likely you would not be successful. But when you put it all together, when you say, I'm only going to trade if I get a double top with RSI divergence at previous structure, while being able to give myself a really good risk to reward, whatever you want to have, if you want it to be a 1.5 to 1, a 2 to 1, whatever you want, and also if I have a previous break of and close below structure, a break and close below a trend line, and Fibonacci confluence. Now we're not just putting ourselves in a trade, we are giving ourselves the best possible chance to win a trade. Then you're starting to get into a strategy, not a tool. You're starting to make a strategy out of the tools you have. And that's what's very important, especially when trading like this, doing a strategy that has top-down analysis in it and some sort of CTS score, which would be combined technical score system. Yes, you do need to have all these tools in order to trade like that, but you cannot use them separately and expect to be very profitable. And that's a very simple way that you can use top-down analysis in order to involve yourself with really good trading opportunities in the market. Now that we've looked at our one trade for today, let's take a look at the equity curve so I can show you guys how it's been so far since my last update on that, which was on February 15th. So since February 15th, we've had about 13 or 14 trades in 7 or 8 trading days. And if you remember, we were in a very large drawdown. We came down from somewhere around 1,400 pips all the way down to almost 1,000 pips, so losing around 400 pips in the month of February up to the 15th. And since then, we have rallied back up, not making new equity highs yet, but as you can see, once I paste these numbers in, we did come out of the drawdown and we are up at our previous equity highs, just yet to break through them. And I told you guys last time that we discussed the equity curve that I did not know how long this was going to last. Sometimes they last 2 or 3 weeks. Sometimes drawdowns can last 2 or 3 months. It's just something you have to be prepared for if you are going to become a professional trader. There is no way to avoid this right here. Absolutely no way. I've never found a system or heard of a system that gives you absolutely no drawdown. So it's important to expect it. It's important to prepare yourself for it, and it's definitely important to backtest so you can know the amount of risk you need to put towards each trade, considering how large your drawdown could be. And that's going to be it for today's video, guys. I know that was short, and I do apologize for that, but I'm really busy trying to work on some course material for the website, and I just quickly wanted to update you guys on how the trading week has been so far. I hope trading is treating you well. And don't forget to like this video and subscribe if you're new. And I'll be posting new videos shortly, so keep an eye out for that. And I'll see you guys next time.